Well, welcome back, guys. And I'm not going to waste your time here. I'm just going to get into business. This is a British pound dollar chart, and it is on the monthly chart. This is going to be a mad time frame analysis. So, a mad time frame analysis involves doing analysis from the higher time frame, that is the monthly chart, to the lowest time frame, which could be the M1. Price is fractal, so whatever you see on the higher time frame, you should also see it on the smallest time frame that you may have. Some other people get to the 1 second or 15 seconds chart, but well, this is MT5, and I think the last one is the M1. I may not go into M1. My analysis would just end at the daily chart because that's where uh my model works well in terms of the levels that I draw in, where price action is very much condensed. So let's go into business. On the monthly chart, the general price action is like this. There's level one here, which was a consolidation post break of market structure here, and then there was this consolidation again. And the last move was to see price trade below an odd low, and this is the social liquidity. So price ran through this low here, and this sets a condition for price to return back into the price leg. That is from this high to this low, price has returned back into the range. There are specific points that I choose to watch, and specifically these levels are the inefficiencies that are just above or below level two. This is level two. We have an inefficiency here that is just above it. So below it, I can't see any. So I'll be watching price to reach for this inefficiency. So as you can see, with benefit of hindsight here, price did get into this inefficiency. Most of the times when this happens, I expect price to now trade lower and purge or reach or trade below this low here. However, the market is horizontal and it delivered differently here. So what do? We work with what we have been given in terms of the price fit and do the technical analysis with that price action given. So basically we have previous year's high, and we have this low here. This would be my short-term low in relation to the opening price here for the year 2024. So when price opened here, it dipped into this inefficiency there. Inefficiencies below price will support price up. And as we can see, the fundamentals have allowed price to trade higher and higher in relation to this inefficiency here technically. And so this move here was just a high probability move when price came into it. It was a high probability trade. One was invested in it. So this is the general price direction. We are looking to purge the buy side liquidity here, which is just the previous year's high and odd low. We are going to focus our attention within this dealing range here, and quickly I'm going to switch to the weekly chart. The weekly chart has provided us with the market structure here, and with the way I do the analysis, and like I said, price is fractal. Here is to being fractal. Here is price to being fractal. There is level one, level two, price purge buy side liquidity. What do we expect? Price to trade back into the range either below or above level two. Most of the times that is. And it did trade below level two here. And when you get back to the monthly chart, you see that this is where the inefficiency is. And like I already said, the inefficiency has been supporting price up. And as price was trading higher and higher, similar levels were also formed. And this is level one, level two, before the purge of buy side liquidity here. After purge of buy side liquidity, what do we expect? Price to trade back into the range. in seeking liquidity, whether above or below level 2, where there is an inefficiency. And we have an efficiency here and has provided the liquidity to cause price to go up in relation to the fundamentals that we have in which allow the price to go up. So again, this was a high probability trade. Let's continue with the analysis here and determine the price direction so far. So the weekly chart is also showing us that we might reach for this buy side liquidity here. In it is just 1 week away. So 1 weekly candle, we might see it trade above the buy side liquidity there, and then we might shift our focus now trading lower and lower. But then what do we have on the daily chart? On the daily chart, we have just purged previous month's high. And what do we expect when we see this kind of thing? We have to see price seek liquidity below or above level 2. We have level 1 here, level 2 here. There is an inefficiency above level 2 here. And also we can't ignore this inefficiency here. So what does that tell us? This is Tuesday, and with this purge of liquidity, buy side liquidity, we should be, I should be, not we, but I should be, I will be expecting price to trade lower into this inefficiency first, and I'll be waiting to see a reaction. This reaction, if strong, we might see it reach for this previous this Tuesday's high, and then purge, purge that high, and then trade back into this inefficiency here, which is very visible here. So there are two scenarios there. Either price can come into it, this inefficiency by tomorrow, and Thursday trade higher up, and Friday trade into this inefficiency. Else we might just see price trade into this inefficiency straight, and then this inefficiency supporting price up until we get to the buy side limit, which is the previous year's high. So for me, tomorrow, that is Wednesday, I'll be bearish, and this would be the first check profit, and this will be the second check profit. As I'll be targeting this one, I'll be making sure that I'm trading the stop loss, because I don't consider this as a high probability target. The high probability target will be this one here. So I better work with this one first than this one, because this can also cause a reaction to see price trade higher up and then trade lower again and then support price up, just like that. So for now, that is for Wednesday. I'll be bearish the whole day, waiting to see price reach into this inefficiency here. In the next day would depend on how uh, Wednesday's price action will be. That is Thursday, the next day. It will depend on how the Wednesday's price action is like, because within this price leg, here. We might also see the very same similar levels, just like we had here, like level one, level two, and then something like that. Break of market structure. If I see that kind of thing, then I'll be bullish again for Thursday, targeting this buy side liquidity. And if I see the very same levels again, and I see them like reach for this buy side liquidity, I'll be expecting then price to trade below this low that might be created here and get far and reach into this inefficiency. But all in all, for tomorrow, I'll just be bearish, and further bias will be provided post Wednesday, that is, in terms of the price action that we might have intraday. That is all that I had for the British pound dollar. But the general direction on the monthly chart, on the weekly chart, is that we have a bullish bias. We have a bullish bias up until we sweep this previous year's high. But on the daily, that's where it gets a little bit tricky. You have to see price trade up and down a little bit, and before we reach for the buy side liquidity there. So these are the scenarios that I have. Price to trade straight into this inefficiency, or trade into this inefficiency, cause a reaction that might purge this high again and then trade lower, and then support price up through this inefficiency. So all in all, tomorrow I'm just bearish. That is all what I had for the British pound dollar. And we might watch that for tomorrow, and I might do a follow up on that. Thank you for watching.